You know, it's been a mixed bag. I mean, Wells Fargo stock rose, but mostly because they announced they're probably going to add to an $18 billion stock buyback. Overall, you guys dig into the numbers better than anybody. How have, under the hood, how have the numbers looked?
Good morning, Brian. Thanks for having me on this morning. Now, you know, I do think that the narrative coming into earnings is largely playing out. We thought that fees were going to be strong. You're going to have some positive trading results, which we've seen from some of the bigger banks that are bigger in those businesses. But the challenge remains loan growth. I do think that Bank of America did a very good job yesterday kind of talking up a positive outlook for the second half. But I got to say that I think investors feel like the group has had a really big run, and they're very happy now to kind of take some profits and see how things develop into the second half of the year.
Yeah, what are they waiting for? I mean, is it really just an interest rate story? Everybody thought, RJ, well, rates are clearly going to end the year at 2%. Whoops.
Yeah, no, I mean, and credit to you. I remember when you tweeted in the middle of June, you know, I think the 10-year is going to close the year at about 1.5. And I think at the time that was a very non-consensus thought. You're welcome. But right now, I mean, that's looking like a fairly prescient call. I'm not 100% sure. I got to say that we have to also look how fast and how far the financials move from an underweighted position to an overweighted position in the course of a few months. Now, I understand that you had a hopefully once in a lifetime event with COVID, and we had positive news around the vaccine. So we had a ton of money at the end of last year and the beginning of this year flowing into the space. So I think it's very important to have some context to see where we were as opposed to where we are now. And I just think that folks want to see a little bit more play out in terms of if loan growth picks up. And to your point, we broke some technical levels on the rates. Investors were happy owning financials when the 10-year was north of 1.5. But when that kind of fell apart, we saw a bunch of money flow out of the space. And you're still seeing that with the outflows in the ETFs, with the XLF and some of the regional bank ETFs and large cap bank ETFs. So it's more of a wait and see right now is what investors are telling us.
Yeah, and by the way, you're my Twitter follower, so I appreciate it, RJ. Thank you very much for caring. Is there more action in the regional names? I mean, you just talked about a kind of, and we get these guests on and they say, you got to look at a PNC. You got to look at a Truist. I mean, I know we're CNBC. We love to focus on Morgan Stanley and Goldman Sachs. You know what? These super regionals, they're the names I hear people recommend the most.
Yeah, I mean, I think that the super regionals, I mean, what we've generally seen over the years is that investors will go into the super regionals and then they feel really good about where we're heading in terms of the macro, in terms of the economy. And that's clearly taken on some water right now. I mean, you have some factors like we talked about. The 10-year pulling back is clearly not great for the regional banks, for the spread lenders. When times like this, if people still want to be in the space, they're going to go where they feel, as your prior guest mentioned, you guys touched on, where you have some strong trading numbers, some strong banking numbers, where you can generate fees, and you're not as susceptible to change in rates, such as the regional banks. So, I think we always say here that the regional banks lead the way higher and lead the way lower for investors that want to express their views on the economy. And right now, I feel like the regional banks are just a tough spot to put your money in the short term. I mean, we're still positive on this reflation trade, but I think it's just taking a break right now. And regional banks are just a little bit of a tough place to be because they don't have as many offsets as some of the bigger banks and diversified financials.
Shepard Smith here. Thanks for watching CNBC on YouTube.